All right, in today's video, I'm going to share with you everything you need to know in just a few minutes on the Glen Ellyn, Illinois housing market. Again, I'm Mike Thornton. I'm a local realtor here in the Glen Ellyn, Wheaton area. If you're moving to Glen Ellyn or thinking about that or want to know more about it, set up a 15-minute discovery call with our team. We'd be happy to talk about your specific situation. And if you are looking and you aren't having access to the private listings, I'm also going to put a link to our Zenlist page, which could allow you access to all the private listings just as we're receiving them as realtors. But let's get back into the action here. I have Glen Ellyn pulled up, and I wanted to show you, I did a little different time horizon here. For folks that are not sure about where the market's going or what it tends to do over time, what's interesting about this zoomed out view is when you're looking at 2013, 14, 15, this is just as all the foreclosures were drying up from the 2008-9 housing market crash, whatever you want to call it. And you can see there's a slow and steady burn as far as home price appreciation, but it's still appreciating. And what's interesting to note is there's about 1 million homes for sale at any given moment here in the U.S., and home prices are still going up. Then you see this crazy run up during COVID, and that's due to supply really plummeting. You had a lot of people buying second homes, investment property. You now had this gap of about 10 years of people that, home builders for what they built versus what they should have built, depending on the resource. We're either short 3 million or 4 million homes in the U.S. Nevertheless, that all catches up to you at a certain point. You have artificially low interest rates, which throws fuel on the fire, and you have investors really doubling down. In this time frame, you had 20% of all purchases were investors. So the problem with that is, from an inventory perspective, is they buy something, but they don't release anything back into the inventory pool. They're just consuming inventory. So it puts a big strain on things. And then you see here, even with rates very high last year, you still see home prices going up and more than rebounding from when the rates had gone up. So it's very interesting. And the only reason I share this is there's not a great story to be told for home prices going down. Now, I'm not just saying that because I'm a realtor and the sky is blue and it's always rosy. Because from my perspective, it's not a rosy environment because we have so few transactions happening. We have so little supply that we're seeing so few transactions. So it's not really a rosy picture from our standpoint, but as a homeowner owning a house or two, it is good because you obviously are going to have that asset going up in price over time. We are only at like a quarter of the inventory that we should be at or would be at pre-pandemic. So there's just, whenever demand's higher than supply, home prices are going to go up. So we don't anticipate that changing anytime soon. To kind of back that up with the supply picture, you have months of supply of inventory, and you can see just how low it is. It's incredibly low. I saw a stat that said that in DuPage County at any given time, there's never been less than 2,000 homes for sale. At the end of November, we got just below that mark at 1,955. And at the end of December, we are at 1,455. That's insane. That's hundreds and hundreds lower than we've ever seen it before. And even when it was above 2,000, we were seeing very, very strong appreciation. So the story here is low supply. It's actually a lower starting point here today in early January than we've ever had. However, now that rates are in the mid sixes rather than 8, there's also statistics to suggest that every time the interest rates drop by 0.5 point, it brings in a certain amount of sellers back into the marketplace that are willing to trade out of their lower rate into that higher rate because it had come down some. So you should see more velocity this year than last year, even though we're starting at such a low baseline. But I do think we'll see slightly more transactions. I think we'll see home appreciation roughly what we saw last year, which is 4 to 5%. And I think that over time, when you get more and more people trading out of the high 2s and low 3s from interest rates, it'll become more of a normal market over time. But it's going to take years and years for that to play out. Again, if you have any specific questions, don't forget to check out the link in our bio, or the description, I should say, for a discovery call. We'd love to share more about, maybe your specific area that you're interested in, or answer any questions you may have. The nice part about InfoSparks here is we can get very dialed in and create some custom areas to look at your neighborhood or your town, or however you'd like to slice and dice the data. We can put that together. Until next time, have a great day.